It was certainly a splendid day of trade with the record closing for the frontline indices. But we'll get you lots more perspective on how exactly you should be approaching the markets. Joining in on the show, Tushar Mahajan, Head of Derivatives, Nomura India, joins in. We've also got P. Fani Shekhar, who's Fund Manager PMS at Angel Broking. Fani, would just like to bring it to you first. I mean, there's that argument that, a lot of the things are set up with the macros improving, etc. But lack of the trigger, seems to be a little bit of a concern, do you think?
Well, in the very short term, we are in a sweet spot, and I don't disagree with that. But in the absence of any policy initiatives emanating from Delhi, or even macro data, if you see, there have been all kinds of data. There is no consistent trend that you see of improvement out here. So in the absence of any strong reform measures which will over the longer term, say 6 quarters from now, result in stronger earnings for corporate India, I think it will be a bit difficult for us to sustain this run. Even if you look at what is happening for the past week or so, it's a small universe of oil and oil marketing companies along with ONGC Oil India and autos, which I believe are ahead of their fundamentals, along with private banks, where you might argue about valuations, but still they are reasonably okay. Now this 30-35% has been powering the index. So I guess it is difficult for the index to surge ahead on the basis of such narrow universe of stocks.
Well, let me put it this way. A month ago, everyone was searching for the trigger, and now there is enough anecdotal data which seems to be endorsing that bullish argument or that bullish opinion. Tushar, of late you've been bullish as a house, but now that earnings season is behind us, most of the policy triggers are over. What do you think will be the driving factor for this market? What will propel Nifty higher, let's say, from 7,900 to 8,000?
I would think that it's really a technical move which will happen from which should happen up to the 8,000 odd levels, and it will probably be a broad market-wide move. What we've seen so far is it's just now largely the large caps which have performed in this move. The mid-cap index, while it outperformed the Nifty yesterday, is still trading well below where it was trading earlier, given the recent fall that we saw in mid-caps last week. So I think, you'll see the large caps first taking it to 8,000, and then you'll see probably a broader rally coming through.
If we look at individual sectors, among the many that really surprised on the upside today, Funny, you did have the auto index, which held out very smartly, and a lot of individual components, be it from the large or the mid-cap universe, really saw some smart gains. What do you think is fueling this rally, and do you think that it's here to stay?
A lot of hope and optimism, especially stocks such as sectors such as auto and cap goods. If you actually look at the volume growth or the core performance of, say, an auto sector, which has been really going places these days, there isn't anything great. So all the projections on the street really point out to very rosy FY16 numbers, which is a good 7 quarters from now to justify today's valuations. Now, that's a bit too optimistic to begin with. And as far as cap goods are concerned, the commentary that you just saw at the end of the first quarter was not really encouraging. Nobody is seeing much signs of progress, although everyone is hopeful that things will be better in the second half. But then, giving valuation multiples which are at the higher end of the average life cycle multiples right now, when probably those numbers, if at all, they will translate 2 years down the line, is again a bit too optimistic. And these kind of multiples, as we have often seen in the past, often lead to a large amount of risk for investors who do get in at these levels going forward. So I guess one needs to be a bit cautious on these sectors which are doing well these days.
Funny, let's talk about this entire debate of cyclical versus defensives. Where are you on that debate? Because in last 2 or 3 days, it's cyclicals which are making a comeback. If crude falls further, rate sensitive and cyclicals really will lead the market action forward.
That's right. Again, it is difficult to imagine crude to settle sustainably below $100 because something has to give in. The entire Middle East is not only in the middle of a political turmoil, many dispensations are new, and there is a whole lot of infrastructure activity that needs to be done there. So I don't think they can afford crude falling much below $100, but that's a separate debate. Defensives are, yes, defensive from a business point of view, but the valuations are very aggressive these days. If you look at mid-cap FMCG companies, they are trading at above 30 times. And cyclicals, the hope is actually triumphing over experience here. So just as I just pointed out, numbers are really factoring in rosy earnings 2 or 2.5 years down the line. So I'm not really comfortable with either of these two sectors. One, because as cyclicals, valuations are far ahead of fundamentals, and defensives are again overrated. So I guess there needs to be a concerted stock-specific strategy, and let me admit that there aren't much stocks, rather than going after a sector-specific strategy.
Let's also get in Sandeep Wagle, who joins in from Palm Eye Wealth. And Sandeep, 6th straight day of gains, 78.50 comfortably crossed on closing. Where do you think the charts of the Nifty are now headed, and do you think that it's going to be the rate-sensitive sectors which are going to provide support?
Well, I still maintain, Avan, that the Nifty will not run away to glory. Some kind of a correction is likely to set in. Now that correction could be 50 points, could be 100 points. That should not be read into as weakness. But having said that, I don't see a 8150, 8200 Nifty in one go. Yes, you may have the Nifty falling to 7800, probably 7750. There will be individual stock moves. I will not get into the cyclicals versus other stocks. I think it will be stock specific. The banking is showing good traction now. I think that will continue the move. And there will be more of stock specific moves is what I would say. And on the downside, I think 7750 should not be broken, and before that we will go to 79.50, maybe even 8,000. And broadly the range for the Nifty is what I would talk of a 77.50, 79.50, 8,000.
Tushar, there may be no big trigger for the fall if we look at the markets and the setup fundamentally, but as we've been discussing with you earlier as well, there really seems to be no trigger which is going to generate any upside as well.
Absolutely. So I think we are past all data releases in India. The earnings are over. So effectively, there is no trigger now. If you call the futures expiry next week, maybe that's the only trigger. But otherwise, I agree with you that there are no local triggers. But I think the fall in oil prices globally recently, one could call that as a big trigger for India, given how we are dependent on oil imports there and how sensitive the economy is to that number.
Sandeep, I'm going to come to you on the charts of some of the counters which really shot up smartly. The likes of a Balaji Telly, how are you reading into that one, along with what a Force Motors did in trades today?
Well, Balaji Telly was a very, very clear breakout. Now, after such a move, I would be a little wary of getting into it at this level. Which is the second stock you said?
Today.
Sorry, Avan, I couldn't hear you.
Sandeep, that's Force Motors that I'm talking about, for the auto ancillary company that,
Okay, I am not very, very clear on the pattern of Force Motors. So I think more or less bias is on the upside, but I would not recommend a fresh entry.
Funny, let's revisit the good old debate on which is the best oil marketing stock to buy. Is it HPCL, BPCL or IOC?
Well, relatively, I guess it has to be BPCL because if you consider the fact that the terrain is the same for everyone, in which case diesel, although not officially deregulated, but the government will ensure that the subsidy will always be contained, and kerosene and LPG subsidy remains the same. BPCL has an added advantage in the form of its oil exploration assets in Mozambique, which actually give a good amount of support to its current valuations. Plus, it is also one of the largest gainer because of the petrol deregulation that has officially happened. So I guess relatively it has to be BPCL, but then you are making that larger assumption that the government will continue with its current policy of ensuring that the subsidy is contained, because let me reiterate that this government has actually not been presented with a tough choice in the wake of either a steeply depreciating currency or a sharply rising oil. Those two unfortunate situations have not yet precipitated. As and when one of them or both of them precipitate, we will know the true policy stance of this government.
Tushar, you have seen the cyclicals no doubt do their bit, but a lot of the defensive stocks also have done the tricks for the markets in the last 2 months. Are you a bit surprised with the kind of strength that you've seen in names like an HUL, Infosys, or even HDFC today may have corrected, but has been a pretty strong performer?
Correct. So not really surprised. It's easy to say that defensives, will tend to underperform when the market is rallying and all, but like you rightly pointed out, it's these kind of names, I call them the high quality blue chip names in India, which have held up the index right now. Given that we are talking about both a broad recovery in the economy, which is both consumer and investment led, we are not really surprised with the move in the likes of HLL. Maybe from here on, as markets consolidate at the 8,000 odd levels and there is more beta which happens, these stocks might underperform in the short run. But per se, given the fact that they've led the move to this level, that's not surprising.
So just to get it right, Tushar, are you a buyer in some of these classic institutional dominated stocks like HDFC, HDFC Bank?
I think after yesterday's move, the portfolio has to gradually start shifting out of defensives into beta. This is just a trading portfolio, so to say. So from here on, like I said, if we are going to be consolidating at this 8,000 odd levels, which is another 100 points away on the Nifty, you would start booking some profits in likes of HLL, the likes of maybe IT names, Infosys and all, and start moving into nibbling into large caps like L&T, ICICI, banking of course, and L&T and the likes of L&T.
Sandeep, comment on some of the cement stocks, the likes of Ultratech Cement, ACC and Ambuja?
Well, Aman, very, very positive, but the entry should have been a little lower. We are not exactly at the bottom or the beginning of the move, but if you ask me whether there is some more upside, certainly there is in most of these stocks. Ultratech being my best pick at a level of 27, 20, 30. I see levels up to 28, 20, 28, 30. So any move towards maybe 2700, 2680, I would be comfortable adding on. And this is not a view for the next day or two. Talk of the next week or two, and I still see a 5 to 7% upside in most of the stocks.
Funny, any specific reason why HDFC Bank, which was considered to be the ultimate halo stock by institutional investors, is now massively underperforming not only the Bank Nifty but the Nifty also? Funny, that question was for you?
Oh, it's for me. Well, that explains the nature of the rally that you are seeing. As and when you are gravitating towards a high beta rally, profit booking would most naturally happen in the bluest of the blue chips because they suddenly appear very sedate and boring. So a part of the investment portfolio, I believe, is now increasingly moving towards the trading side of it. So if this rally continues, or at least the high spirits continue, for another couple of weeks, then expect all kinds of mid caps also to start rallying wildly. Now that actually increases the risk in the market. So for investors, this is not such a great outcome, but for traders, it's as good as it goes.
Let's get in a handle as to what the dealing rooms are advising, given that the market momentum clearly seems to be intact. Gargi joins in from our research desk to highlight that. Gargi.
Well, talk about a Gulf oil first. Some buy recommendations coming in from dealer sources. In fact, they have mentioned that with falling crude prices, we could see an improvement coming in for margins of these companies. So there could be some buying expected going forward to already a 5.5% move that we saw coming in today. Also take a look at SBI, and that stock, if you compare it, in the last 1 or 2 weeks, there could be some buying that is expected from this point onwards. There could be a rally expected to continue, almost a % increase that we saw, but there has been special focus coming in for some of the quality PSU banks from dealers, and going forward with the market momentum, there could be buying coming in, especially for an SBI. Technical trends also suggesting that there could be a slight bullish tilt for SBI going forward. So it's two buy calls, Gulf Oil as well as SBI.
Right, Gargi, thanks a lot for that. Tushar, this question is coming your way, and in the trading book which you run, do you have a long bias towards pharma? Because if the high beta rally starts, pharma stocks also will take a back seat.
I think for now, like I said, I missed calling that sector as one of the defensive sectors. So now it's time to probably, start booking out profits from there, and like I said, start moving into some of the beta names. So levers, ITC, pharma, some of these sectors would get out. So effectively names like Dr. Reddy's and Lupin.
Sandeep, take us through what stands out on the charts for tomorrow.
I still see some more upside in the banking space, so I would go with a buy in IndusInd Bank. That has given a good breakout and closed at the highest point of the day, so I would go with a buy in IndusInd Bank, stop loss of 560, target of 585. The second call is a buy in Ashok Leyland, stop loss of 35, target of 4250.
Tushar, the sector of the day clearly was autos, and autos again are experiencing a lot of underlying momentum. What's your take on something like a Tata Motor DVR? Do you think Tata Motor DVR and the Tata Motor cash stock has a long way to go given the kind of data we've got from Tata Motors on the JLR front?
Yeah, I think we've, as a house, we are very positive on JLR. We've recently upped our targets around that stock as well. And given the strong showing of JLR sales that we are seeing, and relatively stronger data coming out of the US as well, that's a stock which we continue to like, continue to own, and continue to hold.
And Tushar, if we take a look at some of the individual stocks from the capital goods space, L&T is one that has corrected quite a bit from the recent highs. Do you think that it's on its course to be above 2000 or above?
I don't know. Fundamentally the story is good. They've got a lot going for the company. The results obviously disappointed right now, but I think overall in terms of the way the company is, diversifying itself, the way, it's gearing itself up for newer opportunities which are coming along. Tough to put a time frame to this, but I think this stock could give you easily about 25 to 30% returns from here on over the next 6 months.
Okay, thanks very much then, gentlemen, for taking time out and joining in with your views on the show. On that note, we wrap it up right here on Markets Tomorrow. Thanks for tuning in.